Hey everyone, welcome back to Corporate Decoder, the place where we dissect those dense SEC filings so you don't have to. Today, we're diving into Shoals Technologies' latest 10K, their annual report. It's a bit like unwrapping a holiday gift, except instead of finding that shiny new gadget, you might find a lump of coal disguised as restructuring initiatives. Shoals, a big name in the solar energy game, promises us an inside look at their past year. Will it be a bright future or just a lot of shade? Let's find out. Alright, let's get started. Shoals is in the business of electrical balance of system, or EBOS, solutions. Now, EBOS is basically all the stuff that connects the solar panels to the power grid. Think of it as the electrical plumbing of a solar farm. For a long time, Shoals mostly sold its products to huge, utility-scale solar projects here in the United States. But in 2024, they decided to shake things up and go after new markets including international projects, battery energy storage, data centers, and even smaller commercial and industrial projects. The global demand for renewable energy is exploding, and Shoals wants to be there to cash in. Plus, diversifying revenue streams never hurt anyone, right? So how do they do it? Well, a lot of solar projects used to use this old-school wiring method called a home run. It's like running individual extension cords from every single solar panel to a central box. Shoals came up with some smarter ways to do things. They invented this plug-and-play system that's easier to install, more reliable, and even helps generate more energy. One of their core products here is their BLA, the Big Lead Assembly. It's basically a super efficient feeder cable that uses aluminum instead of copper, which saves a ton of money. They say it can cut down on wiring and connections by a huge amount, 80% or more. One of the best parts, they claim you don't need expensive electricians to install it, which is a big cost saver. Fewer connections also mean less maintenance and a lower chance of things breaking down. And because it reduces electrical resistance, you get more power out of your solar panels. It's a win-win-win. Now let's talk sales and marketing. Shoals isn't just selling products, they're building relationships. They want to get all the important players involved early, from the developers planning the solar farm to the construction crews putting it together. The sales team helps with site design, figuring out the best products, and even provides support after everything's installed. This "we're all in this together" approach is how they build loyalty and keep customers coming back. Time to peek at some numbers. They sell mostly to EPCs, the companies that build solar farms for others. Sadly, a large customer contributed around 26.4% of their total revenue. The company needs to diversify its customer base. Of course, Shoals isn't the only player in this game. They're up against some pretty serious competitors. It's a dog-eat-dog world out there, and Shoals has to fight to keep its edge. They compete on how well their products work, the cost of installing them, how reliable they are, and how good their customer service is. Here's a fun fact: Shoals' business tends to be seasonal. Installations slow down in the winter months when it's colder, which can mess with the timing of orders. Let's switch gears to how Shoals makes its stuff. They've got their own special sauce when it comes to manufacturing, a unique process using resistance welds and this cool undermold/overmold technique. They believe this makes their connections super strong and resistant to all sorts of weather conditions. Now, protecting your ideas is crucial, and Shoals knows it. They're all about patents, trademarks, and trade secrets. As of the end of 2024, they had a bunch of patents, both here and abroad, with even more pending. Let's look at the human side of things. Shoals employs nearly 1,300 people. Their company culture focuses on teamwork, open communication, and taking responsibility. Okay, here's where things get a little less sunny. Shoals has a problem with some of its wire harnesses. A subset of wires are presenting unacceptable levels of contraction of wire insulation, or wire insulation shrinkback. Apparently, it's linked to defective wire they bought from Prysmian. They are estimating the potential losses in this matter may range from $73.0 million all the way up to $160.0 million. They're suing Prysmian to try and recoup some of those costs, but lawsuits are always a gamble. So, if they can't recover the money, it's going to hit their bottom line hard. And because of international tensions, they're having trouble getting raw materials and increased tariffs. Speaking of trade tensions, tariffs are a big worry. Increased tariffs on imported materials, particularly from China, could raise their costs. And because of these rising costs, they may be unable to secure the materials needed to manufacture our products. And there's the issue of patents. As disclosed in the report, they're locked in a patent infringement complaint at the ITC and in US district courts. Basically, if Shoals loses these cases, their intellectual property is at risk, and competitors could start copying their technology. Shoals plans to consolidate their Tennessee manufacturing into a bigger facility. Big projects can be tricky with delays and unexpected costs. If things don't go smoothly, it could hurt their business. One of the largest risks in the report: Shoals has a lot of debt. Their debt can make it harder to deal with changes in the economy, which could hurt their ability to grow and compete, and make it harder to borrow more money if they need it. Policy and government regulations are a big deal for solar companies. Changes in laws about renewable energy, subsidies, and even local zoning rules can make or break solar projects. And let's not forget taxes. Changes in tax laws, both for Shoals and its customers, could have a major impact on their financial health. Alright, before we get to my thoughts, let's take a look at some important numbers. At the end of 2024, Shoals had $634.7 million in backlog and awarded orders. That sounds good, but backlog and awarded orders may not result in actual revenue in a timely manner, because there are political, economical, supply chain, and other factors that could result in the failure of the contracts. So we shouldn't get too excited yet. They generated $80.4 million in cash from operating activities, but then you see net cash used for financing activities reached over $71 million. The high value is due to repaying term loans, as well as repurchasing Class A common stock. One thing to remember is that they are still not sure how much the wire insulation shrinkback is gonna cost. That could range to over $80 million in future expenses. So what's the story here? Shoals Technologies is trying to diversify beyond its core utility-scale solar business in the US, and they are going after big opportunities in international markets and new renewable energy solutions. The huge range that it might cost them to fix wire issues and ongoing trade wars are major weaknesses for the company. They have a lot of patents and unique designs. Be aware of legal and governmental risks when dealing with the company, as a lot of external factors are still unknown. Also, the company bylaws say that it is difficult for common stockholders to challenge them on a Delaware court. The board seems to know what is going on and receive reports on cybersecurity, and it is a great sign for the company. However, it has a big question of how it might face in face of further cybersecurity incidents. Shoals is in a rapidly growing market, but you definitely need to be aware of the challenges before you invest. That's all for today's Corporate Decoder. If you found this video helpful, please give it a like, leave a comment, and subscribe to the channel for more deep dives into the world of SEC filings. See you next time.